Join me now to discuss the outlook for the economy and markets for the rest of the year. We want to welcome in our next guest. That's Gary Shields, Chairman, Nassau Street Partners. Gary, it's good to see you. You say the rest of this year will see moderate growth, but increasing selectivity. Tell me a little bit more about that.
Yeah, a few months ago, we were looking for a growth of about 3 to 4%. I think, the inflation's been really tough to bring down, and that has prevented the Fed from dropping rates as well, as we thought they were going to. So I don't see rates dropping between now and the end of the year at all.
Yeah.
And I think we continue to move along at about 2% now, rather than 3 to 4.
Yeah, we've been talking about that sticky inflation for so long now.
Diane, I've been in this industry a long time, and it's always sticky.
Well, I know for people at home, they often feel like that. The consumer feels like that, especially when we think about the K-shaped economy and the consumer.
Well, that's another issue. The consumer spending is not driving the economy. It's capital expenditures that's driving the economy. More specifically, AI capital expenditures. And everything around AI, meaning the company from Caterpillar, who's constructing data centers, to storage companies, to other peripheral types of companies, not the technology itself, but the companies that are turning AI into value.
Yeah, I think about, this is a quick sidebar, like Allbirds saying, we're going to do AI now. You're a shoe company. What does that even mean?
Everyone has AI. We're in the business at Nassau Street Partners of helping companies raise money and doing mergers and acquisitions. And it's almost a requirement that you have AI. I've been on, I go back to, I hate to say it, but I go back before the '87 crash. So I've seen a lot of these ups and downs. And it reminds me a little bit of the dot-com bubble.
So it reminds you a little bit of that. Let me ask you this, because one of the points that a former colleague who's flip sides now, she's on the finance side now, has made, that when we look at different cycles, often in the beginning of the cycle, it's a jobs grower. So her expectation was to see the proliferation of AI add jobs to the economy. What's your view on that?
No, I would probably, I don't think it's going to collapse jobs, but there are a lot of jobs that can be replicated by AI, the use of AI. We use AI extensively in our business, and we can do things in 5 minutes that that used to take a couple of days.
But if you have the right skill set, because look, to be fair, the job market has been holding up better than expected. Yes, we're in low hiring, low firing. We just had ADP numbers coming out showing private sector payrolls grew by 109,000. That's better than expected, right? So there's still strength happening in the job market. I understand what you're saying. I do think in some industries it will pull away jobs, right? There, some data entry. We've already been seeing the differences in, when you think about customer service once upon a time, and now it's like a robot. But if you have the skill set, you could take advantage of the shift.
Well,
right?
I think there are a lot of areas where you just aren't going to replace the human mind. The ability to make a decision. I think a lot of the what leads up to those decisions can be probably replaced by AI. And the thing that's interesting about AI is, and by the way, it doesn't really remind me a whole lot of dot-com bubble had a whole different,
vibe to it.
Yeah, it was, and AI companies are making money. The dot-com companies weren't, but I don't want to get into that comparison. But AI companies generally are doing relatively well, and I do think that if you're doing research on something or you need to do something that's repetitive, AI can probably replace that, but it's happening so quickly. And it's so vast. That's what I think is amazing about this cycle in the industry.
Yeah, no, I think you're right. And excuse me for taking us down the philosophical route.
This is fine.
Because I think that question comes up. But there's so many great things happening. You look at companies like an AMD or Nvidia; they're doing so great. But then you start asking those existential questions of what happens now in terms of the consumer. Let me bring us back to, because people obviously want to tune in and hear your thoughts on sectors and where you see strength strength this year? Where do you see strength happening through the balance of the year?
Well, so we'll flip back to AI here for a second. But I think a lot of the companies that are supporting AI, the industrial companies, some of them, as I say,
like
the companies building the data centers, companies supplying chips or storage. I was mentioning, by the way, and I'll kind of give you a little story. Mm-hmm. When I started on Wall Street, I was a research analyst in one of the sectors at LF Rothschild, in fact, and I covered storage. Mm-hmm. And at that point, we wondered whether storage would ever drop below $10 a megabyte. Today, it's 1/400th of a cent a megabyte, and that I mean, you think about that. That has helped proliferate all of this move. So companies that are supplying AI or servicing AI. Companies that are onshoring or reshoring, there's a movement toward companies moving onshore. I think even healthcare, to a certain extent, is undervalued a little bit. So that might have a little bit of an upwind. Given
your exposure to or coverage of M&A activity and insight rather into M&A activity, the view is that we're going to continue to see more of that this year. We ran into some hurdles this year because of the war with Iran. What's your expectation for activity through the balance of this year, M&A, IPO activity?
Well, I think in M&A anyway, over the past few years we've seen increases in interest rates, and that's caused boards of companies to hesitate. There's been a disruption of entrepreneurs who are still stuck in the valuations of 2000, 2001 when we had free money versus the valuations that the buyers are looking at today. That's the bid-ask spread, I guess I'd call it, has narrowed a bit. So 2025 saw an increase of about 20% in M&A activity. I think we're going to see that. It was the mega deals in 2025. I think in 2026, 2027, it's going to come down market. And we're in our firm, we're seeing more middle market activity happening, and I won't name names, but a couple of the giant firms are actually coming down, lowering their minimums in terms of companies that they're looking at to represent.
Oh, interesting. All right, we'll put a pin in our conversation for today for time. Thank you, Gary.
Okay, thank you.
It.
I appreciate it.
That's Gary Shields. He's the chairman of Nassau Street Partners. Our thanks to Gary.